how the rich use debt to get even richer, and why it works. What if everything you have been taught about debt is only half the truth? Most people are told, stay out of debt. Debt is dangerous. Debt will ruin your life. And honestly, for most people, that advice is correct. But here is the uncomfortable truth. The wealthy do not follow that rule. They do not avoid debt. They do not fear it. They use it. In fact, one of the biggest secrets behind massive wealth is this. Debt, when used correctly, can make you richer. As entrepreneur Grant Cardone puts it,
on the future,
rich people use debt to leverage investments and grow cash flow. So the real question is, why does debt destroy most people, but build empires for the rich? Today, we are breaking it all down. Before we go further, let us get something clear. This is not about reckless borrowing. This is not about credit card debt or living beyond your means. Even billionaire investor Warren Buffett warns about this. He once said, I have seen more people fail because of leverage. So yes, debt can destroy you. But here's the key. There are two completely different worlds of debt. And if you do not understand the difference, you will stay stuck in the wrong one. Let us simplify it. 1. Consumer debt, the trap. This is the debt most people use. Credit cards, car loans, payday loans, buying things that lose value. This type of debt takes money out of your pocket, comes with high interest, creates stress. It is designed to keep you paying, not growing. 2. Productive debt, the weapon. This is what the wealthy use. Real estate loans, business financing, investment-backed borrowing. This type of debt buys assets, generates income, builds long-term wealth. That is the difference. Same word, debt, completely different outcome. Leverage, the real game. Now we get to the core concept. Leverage. Leverage simply means using other people's money to increase your returns. Let us break it down. Imagine you invest $10,000. You make a 10% return. That is $1,000 profit. Now imagine you use that $10,000 as a down payment on a $100,000 asset. That same 10% growth, now it is $10,000 profit. Same money, 10 times the result. That is leverage. As investor Charles D. Ellis said, when profit opportunities look good, debt leverage makes them look better. That is exactly how the wealthy think. Real estate, the wealth machine. If there is one place this strategy shows up clearly, it is real estate. Let us walk through a real scenario. An investor buys a $500,000 property. They do not pay full price.
Our growth strategy requires strategic borrowing to secure market leverage.
I see the value in a calculated risk.
Then we have an agreement.
They put down $100,000. The bank provides $400,000. Now here is what happens over time. 1. Tenants pay rent. That rent covers the mortgage. 2. The loan gets paid down. Every payment increases ownership. 3. The property appreciates. The value grows over time. 4. Tax advantages apply. Expenses and interest reduce taxable income. So the investor is making money from cash flow, appreciation, equity growth, tax savings, and they only used a fraction of their own money. That is not luck. That is strategy. The interest game. Here is where things get even more interesting. The wealthy do not just use debt randomly. They compare two numbers, cost of debt and return on investment. If the return is higher than the cost, they win. Example, loan interest equals to 5%. Investment return equals to 12%. That is 7% difference. That is profit. This idea is echoed everywhere, even in everyday investor discussions.
Market returns, market pension returns that reviewing leverage data.
If your return beats your interest rate, you are making money. But here is the catch. This only works when done carefully. The risk nobody talks about. Let us be honest. Debt is powerful, but it is also dangerous. In fact, some of the biggest financial collapses in history happened because of too much leverage. Even Charlie Munger famously joked, "There are 3 ways to go broke." It is leverage. So why does not it destroy the rich? Because they follow rules. The rules the wealthy follow. Rule 1. Sheet debt only.
The terms
The
we
wealthy
proposed are
borrow
optimal
at
for
low
your
interest
current, The
rate.
terms we proposed are optimal for your current liquidity needs.
We understand the advantage this offers our portfolio.
Finalizing these clauses now secures the rate for the next quarter.
Excellent.
We'll connect with the legal team shortly to ensure seamless execution.
That works perfectly for our team.
As Warren Buffett explains, when he uses debt, he prefers it cheap and long-term. Rule 2. Cash flow first. They do not rely on hope. The asset must generate income. If it does not, they do not buy it. Rule 3. Margin of safety. They always have backup, savings, liquidity, multiple income streams. Because if something goes wrong, they survive. Rule 4. Do not over-leverage. Even when opportunities look good, they hold back. Buffett again. He would reject opportunities rather than over-leverage. That discipline is what separates winners from disasters. Debt, taxes. Here is something most people do not realize. Debt can reduce taxes. Why? Because 1. Interest is often deductible. 2. Borrowed money is not taxed as income. That means wealthy individuals can 1. Borrow against assets. 2. Avoid selling them. 3. Delay taxes. It is a legal strategy used worldwide. Using debt to buy time. Time is the most valuable asset. And debt allows you to buy it. Instead of waiting 10 years to save, you can 1. Acquire assets now. 2. Start earning immediately. Let time work for you. The wealthy do not wait. They accelerate. Business. Scaling. With debt. Debt is not just for property. It is used heavily in business. Companies borrow too. Expand. Hire. Market. Innovate. Without debt, growth is slow. With debt, growth can be exponential. Why most people fail with debt. So why does not everyone do this?
The market is unpredictable today. It always is.
Because most people use debt emotionally, buy liabilities. Do not calculate risk. Focus on consumption. As one analysis explains, the rich use debt strategically, while others are often crushed by it due to high interest obligations and lack of resources. the mindset shift. If you want to think like the wealthy, you must change how you see money. Stop asking, "Can I afford this?" Start asking, "Will this make me money?" That one shift changes everything. Real lifestyle example compared to people. Person A uses debt to buy a car. Pays interest. Asset loses value. Result, poorer. Person B uses debt to buy rental property. Earns income. Asset grows. Result, wealthier. Same tool, different mindset. So here's the truth. Debt is not the enemy. Misusing it is. The wealthy do not run from debt. They control it. They structure it. They calculate it. They leverage it. And that is why it works. If this opened your mind, hit like and subscribe, because the more you understand money, the less it controls you. And the sooner you can start using the same rules the wealthy play by.